Welcome to the Flow Tracy Money Audio Commentary. This is Owen Tracy recording, and it is 3:46 p.m. That is Central Time. Today is December 11th. Well, last night we had Oracle's earnings. They weren't nearly as good as expected, and they're going to be spending a lot of money on building out AI infrastructure, so the share dropped significantly today. Now, it's still in the region of the 200-day moving average, and it hasn't quite unwound all of that overextension relative to the 1,000-day. So we're at a rather interesting juncture here. It's either going to find support and rebound, or it's going to break below today's lows and then extend the decline. Now, I think that we're probably in for more ranging than trending, and that is primarily because there's still a lot of enthusiasm around the AI trend, even if there's a little bit of reticence to fund it or to support the companies that are funding it with debt. But something that I thought was particularly interesting today was that the entire Nasdaq closed out the day in negative territory. And Oracle is not listed in the Nasdaq. It's a constituent of the S&P 500, and the S&P 500 was up today. It wasn't up much, but it was up. And the Nasdaq was down, even though it's not a constituent. So we can definitely say that there was a little bit of a risk-off environment here. But then we also had a lot of enthusiasm in the precious metal markets. Silver was up nearly $3 today. And gold, platinum, palladium, they're all rallying as well. Copper was also up in a fairly dynamic manner. It's at a new high on the LME, and it was recovering on COMEX. So certainly there's a lot of interest here. But something that is also just worth considering is oil prices haven't been moving. And this is rather interesting because usually what you would see in a commodity bull market is that oil prices are the push factor, that oil being in a strong price environment, then that raises the cost of production for just about everything, and then it pulls those other prices higher. But we have almost the exact opposite going on right now because oil prices have been trending downwards and the prices of significant numbers of commodities have been going up. So we have a rather interesting scenario here where it's not really about cost push, it's really about demand growth, and particularly for